Yeah, let's hit SPACs. So I was going to say I did some research on SPACs, but it took me like 2 hours to look at some SPAC aggregators and see some stats. Here's a little bit of the data I found. From 2019 to today, 466 companies went public through a SPAC. Not a SPAC that was listed, but a company that completed a merger with a special purpose acquisition corp. Of the 466, and by the way, some of this data might be off. Some of the aggregators had different figures, so I think it's generally correct, but not precise. Of the 466 companies that went public through a SPAC, 42 of them had positive returns, have had positive returns. That does not mean they beat the market. That doesn't mean they were better than treasuries. That simply means they had greater than 0% returns. That's 9% of them. So rough performance from the old SPAC community here. The average return of D-SPACs, so companies that went public via a SPAC, negative 67%. So this is, for all intents and purposes, a little bit of dumpster diving. But I do think some of these SPACs that have been kind of blown up, and maybe companies that have been thrown out with SPACs overall, and even I get it. There's kind of, if I just look at a company and I think, wow, I like everything that's going on here, and then it says they went public via SPAC, there's something, I kind of get the ick, like something's wrong with the company in some way. There has to be a hidden red flag. Anyways, there are, like I said, there were some companies that had positive returns, and I actually found a couple that I find pretty interesting. I'm going to go through 5 of them. Maybe you guys can pick the ones that you find to be the most interesting from this list. Number 1 is DraftKings, one of America's leading sports betting companies. They have grown like gangbusters, as the whole industry has, and they've poured money into marketing and customer acquisition. They are up 291% since their merger. They trade an EV to gross profit of 11 times. They're not consistently profitable, so it's a little hard to value the business, but still in a category that looks like it's kind of a secular growth category. Second one here is HIMS and HERS Health. Brett and I, mostly Brett, did a research report on this company. It's a platform that allows doctors to offer telehealth consultations, manage electronic records, and make digital prescriptions. If you just go to HIMS and HERS, go to the website, you'll see it's a pretty sleek kind of website, and you can get medications and prescriptions at a pretty cheap rate, and they just added weight loss drugs as well. They are up 134% since the merger. The third one here, this is a company I had never heard of, but Bolero. They operate 352 bowling centers in the US, Mexico, and Canada. I think it's like basically just like a bowling alley roll-up. Trades at EV to EBIT 32 times. It's funny how there's like a roll-up for everything in the public markets if you find it. There's always something out there. EV to EBIT 32 times, market cap 1.9 billion, total return since the merger of 40%. The fourth one here is Hagerty Insurance. They offer insurance products for classic cars, boats, and motorcycles. Basically, if you're an automotive enthusiast, you've probably heard of Hagerty. They have like a famous magazine. They have famous enthusiast events. We actually interviewed their CFO like 2 years ago. And whenever I think SPAC, I think promotional, and Hagerty is kind of like the opposite. They're kind of just this like insurer for automotive enthusiasts that just happen to go public via SPAC. $865 million market cap, price to book was 9.1, but they have a lot of revenue that's like, they have some segments that are not really included in book value. So kind of hard to value there. And then the last one I'll mention here is Veritiv Holdings. Brett, you want to share your screen on Veritiv? Maybe pull up FinChat here.
Okay. Yeah, I had DraftKings loaded up. If you want
Okay,
to do that.
I can hop back to that one here in a second. Veritiv, it's actually the best performing SPAC of the last 4 years, up 593% since their merger. I think this is one that kind of got lucky to some degree, maybe with the AI boom. They basically compete, as I understand it, with Supermicrocomputer, and revenue has just absolutely surged. They offer digital infrastructure technologies for data centers, and needless to say, that's been a category that has seen a lot of demand. So I'll stop
Yeah.
it there. We got Haggerty, Veritiv, Bolero, Hims and Hers, and DraftKings. Any of those pique your interest?
Well, I like Haggerty. I will say we interviewed the CFO. It's an interesting company. It seemed like they had a good head on their shoulder. I will say with that last one, I already know the first sentence you said, it's going to go in the too hard pile. But let me pull up from our friends at FinChat, which you can go check out with our link, finchat.io/chitchat. Link is in the show notes. Get 15% off any paid plan. Help us out as well. There's tons of KPIs. I'm actually going to pull them up for DraftKings here that they make for you themselves. I mean, it's well worth the subscription. But let me pull up. I have a chart on their monthly active users. And if there's any, John or Ryan, any KPI or earnings thing you want to see with DraftKings to kind of, as we've been doing here, John, a little bit of a live analysis of a company
Love it.
for
Love it.
almost a first look. So let me pull up first. I have their monthly active users.
Do they have spend per customer?
They might on the KPIs, but let's look at this one first. It looks like we have about 3.4 million. I can see it December or the fourth quarter is probably higher because of the National Football League in the United States, but it looks like it's been growing at a consistent rate, 32%. Any other KPIs here? Let's see. Revenue per. Is that what you want to see, Ryan?
Yeah, I want to see how much people are gambling once they get on. Ooh, that's a concerning chart for America.
Yeah, that might be a concerning chart, but good for the business. Let's
Such a
see.
cool
Maybe.
platform with these KPIs.
Yeah, it's nice. It's
So
nice,
cool.
especially with a company like this where you want to look at specific stuff. And I think it's my favorite, again, not to toot their horn too much, when you have a company with, say, different segments like
Hmm.
a NVIDIA or something like that, where you want to parse out in charts the separate segments and don't have to do it on your own anymore, which can be a big time suck. Let me just go at, why don't we look at just operating income? Let's look at that one. Oh, well, not the
It's
best.
improving. It is improving.
Yeah, it's getting
Remember
there.
how crazy some of their customer acquisition things were? It was like you got like $1,000 worth of bets if you joined DraftKings, like free
Yeah, look at
for a while.
I'll show you this right here. We got gross profit, and then selling general and administrative expenses, which I guess is not entirely marketing, but I mean, how many quarters here has that been higher? And it's only slightly, catching up as gross profits catching up here, which I guess is fine. They're getting better here, but look at, you know, 2021, 2022, they're spending so much on marketing. Um, Let me just do one more chart here, which is probably just do valuation. Maybe we'll do a price to gross profits because the PE is probably pretty ugly. See about 12 times gross profit. All right. I think that's enough info. John, maybe on this one, what would be the
No,
first thing you'd want to investigate after looking at some of these numbers?
I wouldn't.
Not profitable.
Yeah, and I don't know if there's a big enough moat for me, and it's outside my. I have never really studied gaming, casinos, or online gaming, and so it's just so far outside of my circle right now. I would need to spend too much time on it. It's not a
What if
knock
I
on the
told
not a
you,
knock on the company. Just
yeah, what if I told you on Haggerty that Markel was one of their initial investors?
yeah, that would
Is that a
interest me.
positive?
Yeah, that would definitely
Yeah.
interest me. Yes.
That's
Um,
I like that one a lot. And
What about the bowling alley roll up?
bowling.
I
Dude,
have I would look at that. I would look at that. Bowling's fun. People enjoy bowling. I would look at that.
bowling.
Yeah.
True.
And given what, yeah, it's probably one, honestly, just kind of thinking out loud here, where you don't do it all the time and it's probably low cost to maintain and you can charge, people aren't going to go crazy if you're like, well, it's $12 to bowl versus 10. Like they're not going to go, all right, I'm going to leave this institute or I'm going to leave, the
People
customer.
people pay you for shoes. You give them to them, they give you back, and then you
Yeah.
charge them again for the same shoes.
You put that
That's
little
right.
spray in there. Yeah, exactly. All
Um,
right.
yeah, it's interesting.
I'm
I,
not
I
even.
I don't
Sorry, go
know.
ahead, John.
HIMS is unprofitable
Yeah.
currently. DraftKings unprofitable currently. SoFi, I think, went public via SPAC. Net income unprofitable currently. So I don't know. They need more operating history, more time in the market, and I would like to see profitability before I got too interested in them.
What do you guys think of searching in this area to begin with, fishing in this pond, if you will, the D-SPAC pond?
I like it. It's going to be a lot of rough companies, but I think there's a lot, as John mentioned here. He basically said, we looked at DraftKings for a couple minutes and you can identify stuff that you're going to get rid of right away. So I think that can make it easy to sift through, but there's going to be some stuff. I know when we went over HIMS and HERS for that show, we didn't have that much confidence in management, and we like to get people that have, or at least show maybe in their speeches and when they're talking on their transcripts, that they have some sort of capital allocation mindset, or they understand capital allocation. We got a little bit nervous about that, which kept us out of it. But I mean, the opportunity seemed really high given their growth rate and given the market opportunity to go after this little niche they had in pharmaceuticals and healthcare and all that stuff. And the stock's done really, really well. I mean, the growth has accelerated and they've executed phenomenally, and it traded at like 3 or 4 times gross profit and was inflecting to profitability. So I think there could be opportunities there where if I was gonna guess, I would say that HIMS and HERS was probably beaten down because everyone had given up on SPACs, and so maybe there can be some other opportunities there. John, what do you think?
Yeah, I had no interest in looking at SPACs when everyone was SPACing, right? Because they were just markets were insane. There was just so much FOMO going on. You had celebrity SPACs, you had athlete SPACs,
Cannabis, electric vehicles, yeah.
everything, and so I had no interest then. But yeah, if some of these things have gotten beaten down, then I'd be much more interested in looking.
Yeah, there were some that I noticed that the companies that went public via a SPAC prior to 2019 seem to be a little higher quality. There were some companies that have actually performed well. It was maybe used as it wasn't seen as like easy money, I don't think, back then. Maybe people pursued this route for a number of reasons, but Vera Mobility was one that went public via SPAC a decent time ago, and then probably must have been like 2015 around then. And it's like a toll road. I think you called it, Brett, a toll road on toll roads.
Yeah,
It's like a
exactly.
software that helps toll roads identify
It's a good
cars.
And
description.
the traffic cams, I think. Yeah.
Good description.
Yeah.